Philips posts a big surprise loss. The lighting and electronics giant tumbled 1.3 billion euros into the red last quarter. It also announced an update in strategy, including 500 million euros in cost cuts, and it's starting a 2 billion euro share buyback program. Let's hear more on these results from Frans van Houten. He's chief executive of Philips, and he joins us live from Amsterdam. Mr. van Houten, thank you very much indeed for joining us. These results look pretty appalling. Just what's been going wrong?
We are actually announcing today our midterm targets of accelerated growth, 4 to 6%, and a return of 10 to 12% EBITDA and 12 to 14% ROIC. We do that on the back of confidence in our portfolio. Healthcare is actually doing very well, but also lighting and lifestyle are good markets to be in.
Yes, but that's
when we look at our second quarter.
Sorry to interrupt you, but we can talk about how you're changing this company in just a moment, but I'm just wondering, when you've got this 1.34 billion euro loss, when most analysts were actually expecting some sort of profitability, a small profit, what has gone wrong with Philips up to now, the company that you have walked into only back in April?
The second quarter results that we have just announced show 4% growth and 370 million profit. This profit is offset by the impairment, which is the result of our annual impairment test, where some of the past acquisitions, given the weaker economy and lower cash flow projections going forward, have a write-down of part of the goodwill. These businesses remain good businesses, and we are confident that we can build them out to leaders in their respective areas.
You've announced a major share buyback scheme. Why? Why now?
Yes, well, we are very focused on organic growth and improving the growth rate and profitability of healthcare, lighting and lifestyle. And even when doing bolt-on acquisitions, we see that we have a strong cash flow capability. And we are aware that our balance sheet is not efficient at the moment. And given where we are with the share price, buying back our own shares is a very good investment.
More cost cutting on the way? Fewer management? Is that all part of the big plan now for you?
Well, we cannot be satisfied with our execution at Philips. And on the one hand, I want to step up investments in R&D and selling expenses. And at the other hand, there is too much complexity in Philips, in overhead and infrastructure that we target and want to take out. So we have announced a 500 million euro reduction of that complexity, and that will give us an improvement in margin and at the same time the ability to step up investments in innovation.
How are you going to spur revenue growth going forward? Is China the key?
Already a third of our sales comes from growth markets, among which China. We are very bullish about that. I've also adapted our team at Philips and brought the CEO of China in my executive management team. We are very optimistic about what we can do in Asia and in Latin America. And Philips will get on a path of accelerated growth and delivering a better profitability by 2013, which are our midterm targets that I've just announced.
So that is the key goal for you. Just 2 years' time, this company will be leaner, meaner, and back in profit. You're really confident about that, yeah?
Absolutely.
Because shareholders seem less convinced your share price has virtually halved in 2 years.
Yeah, looking forward, I think Philips is in 3 good markets with healthcare, lighting and lifestyle. We know what we need to do to step up the execution and operational excellence in Philips. The Accelerate program will do that, with on the one hand tackling the operational issues and on the other hand, as a very positive move, increasing investments in innovation and in customer-facing activities. I think this is a motivating message to both our employees and our customers, and we just have to go at it and deliver on that objective and get it done.
You became CEO only in April. Describe the company that you walked into. What's it like to work there? What sort of culture is it there that needs to be changed?
Yeah, 3 months ago I became CEO, and at that time I flagged to the market already that we could not be satisfied with the current course and speed in delivering growth and profitability. At the same time, there is a lot of talent in Philips, and Philips is positioned in 3 good markets: healthcare, lifestyle and lighting. And there is absolutely the potential to do a lot better. So it is about execution, it is about a culture of entrepreneurship and accountability. We are tackling that with our Accelerate program, and that gives us the confidence to declare our midterm targets of 4 to 6% growth and 10 to 12% EBITDA and 12 to 14% return on invested capital.
Okay, Frans van Houten, I'm grateful to you, and hopefully you'll come back on the programme when you set those targets, and we shall talk to you about them again.
My pleasure. Thank you.